Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's finally discuss the situation on the euro currency, since we haven't spoken about it for a long period already. Well guys, yesterday we have seen just another flat speech and some commentaries from the Federal Reserve, and nothing has changed in the rhetoric of the Federal Reserve. It means, as Eric Clapton sings in his song "Let It Grow, Let It Grow," and I'm speaking about the bubble on the real estate market and bubble on the stock market. And this bubble will continue to grow until Federal Reserve will inflow there the 85 billions monthly. Because many economists currently speak about the earnings results of the greatest corporate companies, and they said that the results becomes worse, and this situation could continue. And in fact, this will be a very painful moment when the Federal Reserve will stop to inflow the money. The market this probably will lead to the collapse on the stock market with the appreciation of the dollar, and this will be a really tough moment for the other countries, including the European Union and other countries. So this, in the long-term period, this could stimulate the demand for the US dollar. That could become some kind of the financial markets crisis, not the economy, not the world economy crisis, but just the crisis of the financial markets, when the bubble will stop to will stop to grow and will be ready to blow. But until that will happen, anything will probably still will continue, because investors and corporates who hold significant amount of the government debt and the mortgage debt, they just have no choice where to put this money in, because they can't put it in the loans, since the economy is not as strong as it could be. The corporates do not increase their revenues, not increase the sales. All that they could do is just to put this money in the stock market. That's in fact the only source where they could be put. Well, by looking at the short-term perspective of the euro currency and on the daily time frame, from the technical standpoint, market finally probably will stay with their own, because nothing will press on it. No budget shutdown, no Federal Reserve meeting. In fact, we will have only the gross domestic product data on the 7th of November. But till this moment, market probably will start to move driven by themselves. Well, our major thought and major focus on the daily time frame is a response of the market to this really hard rock resistance that now stands on the monthly time frame chart. And as we have suggested, this respect should lead to appearing of some big pattern that could trigger the retracement on the monthly time frame chart. On the daily time frame chart, this could lead as even some kind of the reversal or something of that sort. That move should be more or less significant, at least on the daily time frame chart. One of the pattern that could be formed here is the head and shoulders pattern. So left shoulder head, this could be right shoulder if this really could happen. Maybe this will be some other pattern. Maybe market will form another leg to the upside and will pass slightly higher. I do not know. It's currently difficult to say, but some respect should appear here, since very rare happens when the market passes through such sort of the resistance just freely without any respect. Really something big should happen, and only in this case we could see this really free pass through this area. But currently I do not think that this could happen in the nearest future and has happened something. No, we did not have such event, some strong action from the government authorities, from the data that have been released recently. So we do not have any drastic event that could move market really freely through this resistance. That's why I think that we should stick with our expectation to see something valuable on the daily time frame chart. Until that will happen, market in fact has the free space till this area. That will be the daily oversold. And take a look, confluence resistance area 135.18, 135.54 area. So I intentionally have chosen this reaction point because that is the hidden reaction point based on the gap. Small gap that hasn't been filled yet by the market, and we can use it as the reaction point. Well, you could draw this line, this level from the different minimum, for instance, from that reaction point. That will give you 36.03, or from that even. That is obvious reaction. But in this case, this level will be a bit wide to color this confluence from 35.44, 136.09. It's more than the 50 pips on the daily time frame. It's a bit looks wide. That's why I decided to show you this area. Anyway, the level around 35.50 area will be first significant support. Next significant support, it is not very interesting for us because it stands deeply below the oversold, but next support that market could reach 133.82, 134.20. That is next confluence support. And I think that this area should be the minimum target if market will form some kind of the head and shoulders and will show a move to the downside. That will be the minimum target of the potential retracement down. Why? Because this area is the 618 extension of the big weekly chart, on the big weekly chart extension of the ABCD pattern. And we know that since this is the minor objective point, just the 618, we know that the acceptable retracement, minimum acceptable retracement for after the hit of the just minor target is 3/8 support of the CD leg. And that in fact the CD leg. That's why this will be the target that market could reach based on this big ABCD pattern. And I think that this will be the minimum target of the retracement if market will form here something and start move to the downside. But I can't exclude that market could even reach the 130.166 area, because that is acceptable retracement after the completion of the ABCD pattern. A, B, C bottom, D. So we have not just the resistance, we also have some kind of agreement with this ABCD pattern. And even 618 retracement is acceptable when the market completes ABCD pattern. And reaching that level will not cancel the possibility to continue move to the upside. But this is a bit too early discussion, because we do not know whether it will be just retracement or market could show even the reversal here, because this is really significant resistance, and that could be treated, upper direction could be treated as just the ABCD retracement on the monthly time frame, on the weekly time frame. That is also possible. This is a bit too extended perspective, and that's why we are not very interested with it. Currently we are interested mostly with the pattern and first target that market could reach with this pattern. On the daily time frame, we unfortunately do not have any patterns yet, but the concerns of the investor about the quantitative easing program and continuing and the bubble continuing on the stock market and real estate market now add some risk to the inflation and to the moment when this inflow of the liquidity will stop. That's why this could trigger some demand for US dollar in nearest future. Well, on the 4-hour time frame chart, I see also no patterns. All that we could do currently on the euro currency is to trade based on trend that now is bearish. The daily time frame trend has shifted to the bear side. If you draw the MACD, you'll see it. Here we also have the bear trend, but take a look. Market now stands at the support. First fib support 36.95, and 4-hour oversold. You guys asked me to show you the 4-hour oversold as well. So market stands now at 4-hour oversold. Fib support, and take a look. Weekly pivot support 1. So some bounce up could possible. If you would like to trade the trend on the euro currency, so you could try to take the short position at some resistance, maybe at 137.43, maybe right at the weekly pivot point. Market will retest it with a possible continuation to the downside, because I see no patterns here that we could stick with, only the trend. The trading of the trend suggests the open position with the trend, some retracements, so we should sell the rallies. Since market at support, we could wait some bounce, take the position with the hope that market will continue move lower, because on the daily time frame the first significant support stands around 135.50 area. So probably market could reach it within a couple of sessions if downward action will continue.